All right, let's do our calls of the day. And the first one is really interesting. It's from Morgan Stanley's Adam Jonas, and it's on the auto industry. Jimmy, obviously coming to you. He says, quote, "We see 2024 as a year that may determine the long-term relevance of the U.S. auto industry." Now, he has overweight ratings on both General Motors and Ford. Let's just state that at the outset. He does say, however, the average S&P 500 company spends its market cap in CapEx and R&D in about 50 years. GM and Ford spend their market cap in 1.9 and 2.6 years, respectively. This cannot continue in our view. What do you make of this note in two stocks that have done next to nothing? You saw General Motors target 40. It's well below that now. I didn't see Ford. Can we throw Ford up again, please? Because that was quick. The target is 15. There's General Motors trending just shy of 29. He has 40. Ford, there it is at 10. He has 15.
Good setup. I mean, there's a lot of, I agree with the premise. I agree that this is the year coming up that it's either make or break. And I hate saying that, but it's the truth. There's a lot that's gone on. We've got this tug of war between EVs and internal combustion engines. Now, oddly enough, paradoxically, the adoption of EVs is actually helping internal combustion engine as it's lowering gasoline demand, and with it, crack spreads in gasoline prices, which is making internal combustion engines, from a cost point of view, more attractive than they were just a year ago. So you're seeing a good demand for internal combustion engine, which helps GM and Ford. However, these labor costs, we need to see. I mean, look, there has been a ton of profit at these companies, a ton. And we need to see how much these labor costs eat into them. I think it's actually very simple to raise prices 1% to 2% on your auto sales over the next 4 years to really cover that cost. But we have to see. The proof will be in the pudding.
The commentary he's got around the EV push is that he thinks they can both participate in that. But this is interesting what he says, at some scale through a more measured and collaborative approach.
Bingo.
While also returning capital to shareholders.
And let me thank you for pointing that out.
That's like having your cake and eating it too.
Well, but they've been doing it. So, you know, they're spending, I'll take GM. They've spent about $10 billion in R&D on the last 12 months, and that's up about 50% from pre-pandemic. That's been spent on EV build-out at the same time that they're buying back 5% of their shares outstanding year over year. Now, the key thing is in the last couple of months, management, Mrs. Barra has said, we're slowing down the EV CapEx build-out. That's what you got to do when you see these EV inventories piling up and the demand has gone down, is slow down the CapEx. So to Mr. Jonas's point, and he's an excellent analyst, about the amount of R&D spend, yes, let's bring it down to a measured pace, but they still want to invest in the EV space for the long-term future. The one data point I want to, you got to do this. If you're going to say, and I've never heard this before, R&D is a percentage of market cap. R&D is management's decision. The market cap is the market's decision, and right now the market cap is extraordinarily low for these companies. So I don't think I'd be judging management's R&D decision by where the market cap is. It's ridiculously low for these companies.
What is the catalyst to get people to buy these stocks?
Well, nothing in the next month.
Because you make a compelling argument. You really do, but you have been for the last year, and the stocks only go down.
Well, a couple of things. Look, pretty soon, I think it's in a couple of weeks, there's going to be a GM analyst day in which they'll say what the effects of the labor strike is. And look, let's face it, sell-side analysts are holding back. They are just waiting to see what management guides them before they put their numbers out there. I think they're going to find, as I just look at the numbers, that it's not that draconian and that the profits are going to be there. But I think that's what you're waiting for a catalyst point of view. Absent that catalyst, they're going to keep buying back these shares at 50% of book value, and I'll just keep concentrating my share of a very good earnings stream.
I'm going to read an email I got from a loyal viewer, I'll just say that, who emails me a lot. I would love for Jim to comment on the fact that GM is $5 below the November 2010 IPO price of 33.
My comment is that sucks. But let me also ask the loyal viewer, what comment do you want me to make to that? You're giving me factual data points and not telling me where it's going from here.
No, but I think it underscores. No, hold on. I think it underscores kind of the point that Steph was making, that the bullish fundamental outlook that you have hasn't worked and doesn't continue to work, and thus is it suspect to believe at this point that it will work?
Well, having gotten out my little vitriol about telling me for the third time in this segment about how lousy the stock has been. I got it. That's a fact. However, when you're a long-term investor, you are making a decision today, not based on the last 10 years, today. And what the earnings stream is versus the price that you're paying for the shares, I see this a very compelling value. And that's all I can do. I'm a long-term investor. I'm not going to get worried about it. What's done is done.
What do you think about this company going into the next recession? So I understand you don't think there's a recession coming this year. You've been right that there hasn't been one this year, but surely you would agree there will be one. If you study the history of the American automakers, after every recession, they emerge weaker than the prior version of themselves, not stronger. They never rebound in share price, in financial health. How do you think this company, if you say you're a long-term investor, will fare in a recession, even if that recession is not till 25? Do you still want to be a long-term holder?
Josh, it's a great point. I get your point.
Of the stock when that happens.
I certainly get your point. It's well made. It's factual. It's correct. I will point out that at the automotive business, and you should strip out GMAC, that's separate, okay? At the automotive division, there's $13 billion of net cash right now. It's a very strong financial position. In the last quarter, they generated $5 billion of free cash flow. Now, your point is well made that when there's a recession, that free cash flow is going to go negative, and you're going to eat into that cash balance. My point is not seeing a recession on the horizon, me personally, for the next 4 quarters. That gives even more time for that cash kitty to build up and for those shares to be bought back. But emphatically, I agree with you. In a recession, the financial health of any manufacturing company is going to go down. If I saw that in the next 4 quarters, my investment outlook would be different.
I think I saw a promo earlier that Mary Barra is going to be on the network. I think maybe it's tomorrow. Let's figure that out, and so I can be more specific about that. But I'm pretty sure I saw that Mary Barra is going to be on tomorrow. So you want to watch that?
I do.